Everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man all the way from rainy Philadelphia, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And
excellent.
With that, let me share my screen. Okay. If you guys are joining us for the first time, you have a question, you can put that question on the live chat on YouTube. Will's watching it. He'll read it back to me. If you want to come on a show and ask your question live, we also provide a link to Zoom. Click on that link. That takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. When we let you in, everybody could hear you, but you could ask your question direct. If you guys have any questions about Market Chameleon tools, data analytics, strategies, you're welcome to come on a show, talk about it. While we're waiting for questions to come in, we'll take a look at the pre-market report, see what's trading at pre-market hours. I might default to some questions. I'm getting over the email if we don't get any questions coming in. And we'll take a look at a couple of reports, see if we could get some insights. Sound good, Will?
Yeah.
Let's start out with the pre-market report. These are stocks trading in the pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 52 stocks made our percentage gainers list, 67 on the decliners. From that perspective, looking like we're setting up for a bearish bias at the open. Let's filter down this list to S&P 500 companies. We want to remove small cap stocks, ETFs, leverage products, closed-end funds, preferreds. Take those out. Let's take a look at what's going on in S&P 500 companies. And to do that, I'm going to use this filter here in ETF. Drop it down, and you could see that that list shows different ETFs to select from. The top one is the SPY, S&P 500 ETF. When you select that, the list below will get filtered by stocks that are holdings in that ETF. You know, let me refresh my screen. I think I had it up for too long. Let's get the latest. So over here, you see 56 stocks on a percentage gainers list, 101 on the decliners. Let's go to SPY. Here we see 2 stocks made our percentage gainers list, 15 on the decliners list. From this perspective, looks like we're setting up for a bearish bias at the open. If you don't have any questions, Will, maybe what I'll do is default to, actually, there is one thing I think we did do a publish last night, because I've been doing some of these shows, and internally, I do have some filters for the homepage where these alerts come out. With this drop down to select certain types of alerts to filter out, and with this symbol search, so you could search by symbol, let's say SPY. So you could get a history of the alerts for SPY. I think we published that out. Let me know, because I'm still on my internal. But let me know if people do see that. You know, we may have pushed it out a little bit prematurely, but I haven't been, seen any errors with these features. And I asked the developers to push it out on the next publish.
All right, perfect.
You guys might have that. The idea behind there is during the day, when alerts come out, you could drop this down, and let's say you're looking for a certain type of alert based on what's in here, like a bearish call spread, bearish put spread. Now, these, you're not going to see anything today because these get cleared out in the morning. There's a setup process in the morning to start new alerts as they come in. So we're not going to be able to go back to yesterday's alerts. They need to get cleared out because there is a feature in there that needs to get set in the morning to receive new fresh alerts. But once they start coming in during the day, you'll be able to use this. If we have I think we did do a publish last night. We do a couple, usually during the night when there are less people using because the markets are closed. That's when we do our upgrades, with new features or enhancements, performance enhancements. Those are done, in the middle of the night when there's less usage, because when you do a publish, what happens is that publish tends to also slow down the performance of the website as those features are getting updated. Okay. So usually if there are new features, you're not going to see them until like the next morning. But let me know if you guys see this. If you do and have questions, we could talk about it. If not, I'm going to move on. Any questions?
All right, well, there's a little delay we can ask, but nothing's popped up yet.
Okay. So a couple questions that come up sometimes I get over the email is really, these are common questions I get from people who are just starting to get interested in trading and investments. Okay, so these are the common questions, and I'm hearing less of them now, and I am hearing more of, I think, advanced questions that interest me more, but I'm going to come to this as well because I've been getting a couple of them. And the questions are somewhat related, so I'm going to bunch them together. Some of them are like, well, Dimitri, just tell me, what do I have to do to make money, right? That's like a common question. Well, just explain to me really quickly what I have to do, show me the steps, right? Then the other question, and I think it's somewhat related, is if I do a trade and it goes, then it's a bad trade, goes against me, what do I do to fix it or manage it out of it? And I'll explain why those are two related. Now, when somebody says, Dimitri, tell me how to make money, or first of all, that's right off the bat, it's a wrong approach, right? You're thinking of it, you're not thinking clearly. You think you are, but you're not thinking clearly, because anything you do, right, football player wants to make more money, whatever, but it's, how do I become, what are you doing? You're doing trading. It's, how do I become a better trader, right? If you're thinking more along those lines, you'll see more success than if you're just like, how do I just make money, right? It's like trying to open up a chessboard for the very first time and say, how do I become a chess master? How do I win? How do I get checkmate? Well, there are lots of things in front of it, the check before you even get to that checkmate. And the thinking is potentially when you get it in there, you're only thinking of stock can go up and down, and I have to be right in calling it going up or down, right? Because you're thinking in very simple terms, and that's really not trading. That's not how you evaluate trades or options. There's lots of stuff going on, and people, when I try to paint an analogy, the thought process must be you're playing tic-tac-toe, right? And when you're playing tic-tac-toe, there's probably like 3-4 moves that you always do. Either you're gonna tie or win if somebody's making a mistake. But trading's not tic-tac-toe. It never was like that. And if it was like that, you probably wouldn't even have all these tools and analysis and stuff. There's no 3 moves to do 4 moves or 5 moves, where you open up your screen and you click on this, click on this, click on this, and then voila, success. It just doesn't work that way, and you can't think of it that way because you're setting yourself up for disaster. What is trading? It's probably more like chess, with chess, but it's a much more complicated chess game. But with chess, there are strategies, and then when you start learning chess, there are wrong moves that you can make, and then there are good moves. And when you do make wrong moves, on the other side, people will exploit them right away. That's how trading is. So when you start doing bad, inefficient trades, those will get exploited immediately. Okay. And there's no way to get really out of it because, once you do that, you're at a big disadvantage. And those are usually done in the very beginning, of trading. And I'm going to just put this up here for you guys. And I looked this up because I did kind of get a question in there about theoretical edge right before we started the show and show me this. But just to put it in perspective, these are 10 worst possible moves, you could read about in chess, right? And what will happen is if you do these moves because you don't know that these are bad, the person on the other side with some knowledge, an average player, will be able to exploit it right away and know that, wow, you just did such a bad move that the possibility of you moving on and winning that game is very low, right? Because you just put yourself into such a bad position with the very first opening move, right? And that's how I think about trades. I don't think about trades. A trade, I evaluate the trade and I have a certain outlook on the trade and I do my analysis and I think I have a certain edge. But when I do the trade, that's my opening move. It's not my end move. That's not where I think, because after that trade, I know that there's going to be other things that are happening that I have to pay attention to and reevaluate. And those are beyond my control. The only thing I could do is look at that feedback loop and through experience know how to start navigating around it. But there's no one trade that you do that will, make, propel you to success. That's not how or to riches, or buy a lottery ticket. It's kind of like your opening move and then you're doing another trade and then you got this portfolio. But think of it, that opening move is critical because if you're doing those opening moves and you're doing a bad trade from initially, even if you had the right outlook, you really put yourself in such a position that it's almost impossible for you to trade out of it because people are going to be exploiting you all. And people who are good at it see those mistakes and know how to exploit it to their advantage. So look, if you look at these moves, there's 10 of them. They even have names for them, and you could take a look at like, this is a bad move. Just think about how many moves you're going to make after this, but right there, that's a bad move, right? That's a bad move. This is a bad move, right? Here's a bad move. All these, you could see how many different things you could do that are putting you at a disadvantage, right? It's not just one thing. It's all this is putting you at a big disadvantage. And that's one of the things we want to try to avoid, like right from the outset. If you're doing something that is so bad, or puts you in such a disadvantage that it almost doesn't matter at that point, from here on, once you do this, because the people on the other side already see this, right? They see this and they'll just know how to exploit it. And it's going to be almost impossible from that point to be, to have a successful, game. So I'm trying to put that in perspective from the type of questions I get. It's not like tic-tac-toe do these moves, because even if you know the right moves, right? Even if you go and then you're attacking the middle, you still don't know what the other side's going to be doing, and you're still reacting, because all that there's still uncertainty. You don't know. There's no way to control it, right? There's no way to control the other side or what happens. But you don't want to, you want to be always efficient, right? That's what we want, efficient, and try to put yourself in a position of strength as best as possible. All right. And that's kind of, I try to navigate, try to explain it, people, but even when I explain it, I think sometimes people just still want to go back to, well, show me the tic-tac-toe, and there is no tic-tac-toe. That's not how trading works, because look at this chessboard. We're all looking at it. And even this will be complicated, right? To show a person and teach a person, and it takes a long time to train just to start getting good at a game. And there's a limit to what you can do, right? There's a limit to what you can do on this board, and all the information's in front of you. So all the available information is right in front of you. But trading, you don't know all the available information, because there's information out there that could be available that you don't even know about. There's always those unknowns. That makes it even harder. But kind of wanted to see if that makes sense to you guys. If not, okay, then I failed. But trying to put things more in perspective. And when you ask me, well, Dimitri, show me the 3 or 4 things, I have to do. Well, there's no such thing, right? There's no such thing as doing these 3 or 4 things and to guarantee you success. If there was, I would show it to you. Believe me. If I thought there was, I would definitely not hide it, and I would show it to you, but they don't exist, and nobody else can show those 3 or 4 things, in the hundreds of years of trading, that if you do this, then you'll get success. But if you're looking for, a more predictable outcome, then you can trade treasuries, right? Because treasuries, you can, at maturity what you'll get, in short CDs and so forth. Those are more predictable outcomes.
The people are loving your chess talk. Rob asks if you're, and I don't know what level you play at, but he's asking, is Dimitri a rated USCF player? I'm assuming that's
I just showed this, no, not because I'm a chess master, but I wanted to show an analogy, because if I put a tic-tac-toe up, it'll be much easier, right? We'll say, okay, put an X here, somebody puts a 0 there. It's much easier than when you're looking at this, because there's a lot of different variables that come into play. And what you want to make sure is that if you're doing this kind of stuff, nobody can help you, because the market is smart. There are computers scanning for this, right? So when you're doing really bad, trades from the start, forget about like what you're doing after. If you're doing this from the start, there's almost nothing post, this that can help you, right? Because you're already at a clear disadvantage, and you're at such a disadvantage. How do you get that? How do you get that edge back? How do you get that edge back? It's going to be almost impossible, and this is just your first move, right? A trade is just kind of like your first move on the chessboard. It's not your last move, right? You can't do one move and say checkmate, right? That doesn't work that way. It's kind of like your first move, your first assumption, your first outlook, and then what happens afterwards. And it's kind of an art, it's a skill, it's an experience. There's no step by step, like in IKEA furniture where you follow these 5 steps and voila, you have a couch. It
Well,
doesn't
it's
work.
interesting because Michael McRae very early on said the real question is how do I how do you manage risk? And then 4D Drover, who made a couple comments, says one which again gets back to he says, thing is, any decision you make on a trade, you are going to be wrong, LOL. And it's just a matter of what you're, basically what you're doing with that trade when it goes against you potentially, so it's, and he was relating
Well,
it
that's
to
what I'm
chess moves and.
right. But what I'm saying, that any move, right, then you have risk on the board as the other side moves. But if your moves are bad, there's no way to trade your risk post trade, right? It has to be pre-trade. You got to really understand pre-trade before you do it, what your risks are, what you think your edge is, why are you doing it? Is it, what is the purpose of it? And those are important, right? Because kind of like you were reading, to me, it sounds like the assumption is, well, I could do any move, but it's how, after I do any move, how do I manage? And that's not correct, right? Because if you're doing really bad moves, there's no way to manage out of it afterwards. There's no like take backs. You can't say, oh, well, let me move this back and start over. Once you execute a trade, that's it. You got it on. Hopefully that was.
Well, Lauren brought up something the market is selling off. I haven't looked at Tesla,
Yeah.
but he said Tesla's holding up. It is interesting because yesterday there was a lot of Tesla chat in the community about, and prices were discussed everywhere from $20 to a share. I think Alex Alba mentioned under 100. Yeah. And it is interesting if Tesla is actually holding up here. There's so much negative news. There was a whole commentary on CNBC right before we got on. Morning Joe from MSNBC was on, and he was talking about how crazy Musk seems now, and the tweets, and the fact that he's kicking people off Twitter. It's all the Tesla stock has basically become a short sale for this public, display that's going on with Twitter, right? But and it's been hit. It's down 30%, I think, since he acquired Twitter. But with this market selling off and him selling shares the other day, it is interesting if it's not selling off this morning with the market down.
Right. And I'll show you how hard it is for anybody, because what is a stock, right? A stock price, a valuation, you have a market cap. What is it really? What does this mean though? And this is people's expectations of how the company will perform in the future, not in the past, but it's projections about sales, about, margins, how management, all that is getting priced into the valuation based on future expectations. But when you're pricing a stock, it's not that easy to make those projections. It's like nearly impossible to make, because you're really, what this is projecting is years into the future, not just next quarter, but years into the future. Because if people thought the next quarter it's going to have a great earnings and then go bankrupt, it's not worth anything, right? It's not based on one quarter, it's based on years of projections. And just to give you an idea, like, look at the range of Tesla in 1 year, 402 to 153. So you could see how those projections from, in a very short period of time, can be changing, right? Because that's the market's forecast of, future. So today, whatever we have today, you're using your best information to make a projection and to get an idea, is this overvalued or undervalued, right? But things are constantly changing. Things are changing in the economy. Things are changing, you know, with legislation, with your competitive edge, with, you know, demand and supply, with management. So many variables are constantly changing that you could only make an evaluation at a one point in time, right? To say, based on today's information, everything I have in front of me, right, and my assumptions, do I think this is a good deal or not? That's, you could try to do that, but there's no way to know what is going to happen tomorrow or the week after or the month after, and there's no way to control that. You know, nobody has control over those outcomes, right? Nobody has control over, you know, what the economy is doing or what the management's doing or what is, you know, and even the people with the best analysts, right? The best analysts you could have with, you know, people coming in from MIT, PhDs, all those, they're on equal footing with you because they don't know what's gonna, look at this FTX, right? This FTX, it had a lot of private equity investments going into the FTX. And they all say they did their due diligence. They all said that they looked through the books. They all said that they made all these, you know, solid, it met all their criteria, and they put in hundreds of millions and billions of dollars into it. And at the end of the day, you know, it all went bust. So you don't know, you know, the future outcomes. What you're trying to do is take the information you have and make an evaluation to say, at this point in time, you know, do I have an edge? What is my outlook? And, you know, is it enough of a cushion? Is it enough of a risk reward ratio to, you know, place this strategic risk on in my inventory, or should I not? All right, so we're right up at 9:30. Well, I probably talked about it longer than I thought. I was going to mention it, but it was a response to some emails that I'm getting.
As always, D, you bring information in an extraordinary way, and everyone is super happy with the discussion. Thanks, my friend.
All right, thanks everyone for joining. Have a great weekend. Have a great trading day. Hope to see you guys on Monday.
See you on Monday, everyone. Have a great weekend. Bye.